Alright guys, in this video I'm going to be talking about my trading plan. I'm going to talk about exactly what I'm using as far as what I'm trading, how I'm trading, and all that stuff. I'm also going to cover a few of the tools I'm using as well as far as to help me out with my trading plan. So to help me execute things and find the stocks I want and stuff like that. These are the tools I use. The great thing is these tools I use are free, so you don't have to pay for anything. Um, that's the best part. So it doesn't really cost anything to use these, and you can get started on a very tight budget if you want. You can put as little money as you want into this, but I probably start with about $500 to $1,000. I'm planning to start with $1,000 once I start trading with actual money in my account, and then we'll go from there. So that's what I plan on doing. So let's get started here. Let's talk about some of the tools real quick. First off, you have to be able to find the stocks that that you're going to want to trade. And finding those, you can set up your own screeners, but it's really hard to do that in the beginning if you don't know what you're doing. So I found an app. It's on the Google Play Store. It's on Apple's App Store as well, but this is the Real-Time Stock Screener app. I like this app. It's pretty much just download it and you don't have to do anything, and it will tell you the pre-market stocks, and will tell you actual market stocks when. So pre-market would be basically from 4 a.m. to 9:30 when the Wall Street bell rings, and will tell you all the top gainers. That's what you want to see, is your top gainers. I'll talk about more specifically in my trading plan, the exact stocks I'm trading, and go over that here in just a minute. But just know that this app, you want to download this. It's free. There is a paid version, but you can get the free one. You don't need to pay anything. All that information's on there. They might have some ads that can get a little annoying with it, but other than that, pretty good, simple. The other tool I use is my brokerage account, which is Webull. I just use Webull. It's simple, it's easy, it's commission-free trading, not too complicated. Just to give you a little insight on that one, this is my paper trading account, where I'm at right now, and some of the stocks I recently traded. And you can see here, it gives you pretty much everything you want to get started with. And then once you actually start trading, you can go to this tab here and you can start trading with real money. I don't recommend you do that until you actually prove your strategy in a simulator first. So make sure you do all that and take the time to learn these tools well before you start messing with real money, because the last thing I want to see anybody do is lose money. I have lost a lot of money just in paper trading, so I'm obviously not ready to get into putting real money on the line here yet. So I don't want to do that. I want to learn how to trade my strategy here in a paper trading account in a simulated environment where I can learn all this stuff, so I can understand. I can click all the buttons and go, hey, what's a 5-minute chart look like? What's a 1-minute chart look like? What's a daily chart look like? Why does this here? Why does all this, so you got to learn all that stuff. And I just recommend setting up a free account. Just do it, set it up. I'm not affiliated with them in any way. I'm not getting commissions from these guys to tell you to go with these guys. You can go with whoever you want. You want Webull, Robinhood, Moomoo, E-Trade, Thinkorswim. Any of those are great commission-free brokers. Pick the one you like, go with them. I'm just using these guys because this is who I use. So you're welcome to do whatever you want there. So those are the two tools I use in my trading. I use those two tools. I mean, not too tough. So let's get into my actual trading plan now, just to cover exactly what my trading plan is and how it works. Now, I will be honest here. My trading plan did not come together overnight. I didn't just develop this one day. This is something that took a couple of months to figure out for myself. And I recommend you do the same. If you're going to figure out your own trading plan, you want to spend time figuring out what is your trading plan, because this takes time. This isn't something you want to put together overnight, and just because someone like me is telling you this is what my trading plan is. Your trading plan will be based on your risk, what you are willing to take as a trade and willing to do. Maybe your risk tolerance is a little bit more than mine. So or maybe it's a little less. I don't know what it is. I'm not telling you have to trade like me. This is just mine. I'm sharing it because I want kind of a baseline of where we're getting started here as far as trading. And that way, you know where I'm coming from as a trader. And this is what I have so far. So let's just dive into it. So first off, let's talk about my overall goal. My overall goal is to earn $1,000 per trading day with a $250,000 year annual goal. Now you might be thinking, that sounds wild, Chris. There's no way anybody could earn that much. And I will tell you, $1,000 a day for most online day traders is actually low. A lot of guys, I see guys, if you follow Ross Cameron or any of his stuff, you can see how much that guy makes. He makes way more. He's had a month where he made over $1 million a month. I personally cannot see myself doing that. Not right now. Maybe someday, but right now, $1,000 per trading day. There's 250 trading days roughly in a year, so 250,000. That's how I came up with that number. And then I want to earn roughly 20 cents per share per trade on average. So some are going to be less, some are going to be more, but that's what my overall goal is. Now, as far as the market I will trade, I am going to trade stocks. I'm going to trade small cap stocks, actually. Small cap stocks. That is what I am focused on. I'm not trading mid cap stocks. I'm not trading large cap stocks. I'm not trading Nvidia, Apple, the S&P 500. I'm not trading any of that stuff. I'm trading small cap stocks based on the scanner that I just showed you just in the beginning of this video. That's how I figure out what stocks I'm trading. Now, I don't trade, I should mention here as a caveat, I do not trade penny stocks. So anything below $1 I try to stay away from, because then there's a big reason for that. Because penny stocks trade at a 1/100th of a cent. And they're going to have a range where they go up 5, 10, 15, 20 cents. They're only going to go up maybe a couple of cents, 5 cents. I'm not looking to make trades at 5 cents. I'm looking to make trades at 10, 20 cents and beyond. I'm trying to make higher trades setups where I'm making 10 to 20 cents. And you can't do that with penny stocks really that well. Some people like to dabble in penny stocks just because, you know, if you had a stock that was worth, say, 10 cents and it went up to, you know, like $1, I mean, that's a huge gain for a penny stock, to be honest. But it's usually very tough for them to do that. So I just avoid them altogether. Plus, there's a lot of schemes around penny stocks, like pump and dump schemes. You can Google that and search that, but that's why I don't recommend those. That's why I trade what I trade, and I've found over time with my strategy, that's why I avoid those altogether. So let's go into the next thing, time of day. The time of day I trade. This is really important here. A lot of people will trade all day long. I do not want to do that. This is particularly for me a lifestyle choice. I'm not here to trade 8 hours a day or start at 4 o'clock in the morning and trade till 8 o'clock at night. I mean, that's a life sentence for somebody. I don't want to do that. I don't want to stare at monitors 16 hours a day, guys. That's not what I want to do. I want to get in, I want to make profit, and I want to get out. And especially in the beginning here, I'm just making one trade a day. So it doesn't take long to make that trade. I probably spend more time just looking at stuff and trying to find that A plus quality setup. And my trading hours go between 7 in the morning to 11 a.m. But most of the time it ends at about 10 for me. So actually it ends a lot sooner. So, and some days I get a trade right away. I get my one trade right in at, 7 a.m. and that's it. I'm done for the day. So it's great. So that's how I do mine. That's what I focus on. I'm looking for, the way I also do this at the time of the day, I'm also looking for news at the top, bottom and top of the hour. News is really the catalyst, what you're looking for that drives these stocks. And that's one of the big things, as I will mention here in a little bit. And when I talk about stock selection, what I'm picking and stuff like that. So time of day between 7 and 11, and I want to look for news at the top and bottom of every hour. So I'll look at 7, I'll look at 7:30. If there's nothing, I'll wait till 8. 8:30 and then 9, and then of course at 9:30 when the opening bell on Wall Street hits, I want to be there for sure, because that's when a lot of momentum starts to hit the market, and I want to look for a trade. If I haven't hit one before in pre-market, that's definitely where I'm going to be looking. So let's see, amount of starting capital. In this case, I'm going to start with $1,000 of starting capital. That's what I want. That's what I'm willing to risk. If I would lose $1,000, I'm okay. I'm not going to put all my life savings or go into my actual retirement account and pull all this money out of that. I do not want to do that. That is not my idea of trading here, because I still have my regular retirement account sitting aside. If I make money with that, it's great, but I'm not going to pull money out of that to start this. I'm going to start with $1,000 of my own money. And if I lose that $1,000, guess what? I'm out $1,000, but I'm not going to crash my entire retirement savings as a result of that. So I don't want that to happen. So I'm just going to put $1,000 of my own money in there, and I'm going to do it like that. Now, in the beginning, I'm actually going to start with what's called a cash account. I'm not going to get into a margin account. I'm going to do a cash account. The reason I'm going to do a cash account is because I can do one trade a day, and in a cash account, I can trade that, and as long as that trade settles, we have what's called T1 settlement. T1 settlement means that that trade will settle in one day. It used to be T2, but back in May, it transferred all to T1 now, which is great. And I can make a trade once a day, and that's good with me. Now, depending on how much money is available, I can make multiple trades, but actually I just want to make one trade a day. So just start with that. That's what I'm doing. So all right, let's get into my stock selection process. How do I choose the stocks? Now, I didn't come up with this over a lot of time. I developed this by following Ross Cameron. If you follow him, you've seen his. I highly recommend you sign up to his YouTube channel. Follow him. You don't have to buy his products, but I just recommend you can buy them if you want. That's up to you. I don't own any of his courses. I am not affiliated with him in any way, but I find his stuff very valuable. And of all the different people I find online, Ross has got the most information. He's just very genuine, authentic, and he really knows what he's doing. I know that because he shares his actual broker statements right online. And you can check them all out. You can find out how good he is. And if you don't like him, what he's doing, that's fine. You don't have to follow what he's doing. So let's get into the actual stock selection. I follow what he has done there, and I've built my process based on that. So let's get into the first component of his, let's see here. Let's get this. All right. So the very first thing that I look at is a stock that is up at least 10% on the day. This is what Ross has suggested, and this is what I have found to be really helpful. At least 10% a day. Most of the time, I like to see it up a lot more than that, 30, 40, 50, 100% on the day. Now, you might be thinking, Chris, if it's up that high already, wouldn't the move have already been made? And actually, yes, you're right. It has made the move, but what you don't understand is that when a stock is up 100%, all the volume in the market is now focused on that stock because it's moving, it's going up. And if it's gone up 100%, it might go up 30 more percent. And if I can jump on that move and get a 30% gain, a 10% gain, a 20% gain, guess what? I'm going to make some money on that stock today. You don't make money on stocks that are moving flat and doing nothing. And if you're trading large cap stocks, mid cap stocks, stuff like that, these blue chip stocks and stuff, you're just not going to see that kind of volatility where it's going up 10, 20, 30, 40, 50, 100% in a day. So, and I've seen stocks go up 300% in a day. They were up 100% and they went up 200 more percent. So that is the first component of what you're looking for. So, all right, let's get into the next one. The next, we want to have a stock that has a low float, less than 20 million shares. So what is float? Float is basically the actual supply of stock available to trade, and less than 20 million. So like 10 million less is even better. And sometimes less than a million is really good, because what this means is that you're going to see a lot of people trading those stocks when there's not a lot of supply. it's going to drive that price up higher, and it's going to have a direct effect. If you had a stock with 100 million share flow, well, it's going to be really tough to push that up because there's just so many stocks, shares available to trade. So people are not going to be able to push that price up as hard as if it had a lower float. So know that it's a low float stock. Less than 20 million is best. 10 million is really good though, if you can get that. So, all right. Next, we want to have a stock that has a news catalyst. It has to have news. And one thing that's really nice, I'll just switch screens here real quick to back here to Webull. What's really nice about that is when you go in, these stocks will give you all the news right here. They'll share the news right here. So you don't have to go digging around on Google or anything like that to find all that news. It will tell you that right away. And a lot of times they'll have a yellow like news box right here, and it'll show that it has news or there's news here. And you want to look at that news, and the better the news, usually the better the stock will trade. So just know that you want to have that catalyst. You want to have that actual catalyst there for the stock. You want to have. If it does not have one, that's usually a red flag that probably you want to stay away from it. And it might be moving up really good, but usually what that means is it's moving up and you might get caught in something like a flush where the stock drops right away. That's why I like stocks with news catalysts. It's much more likely that if they're going up a little bit, they're going to go up a lot more. So all right, let's see what the next one is here. The next, oops, undo that. Get my cursor messed up here. Next thing we'll look at is relative volume. So relative volume is the actual volume a stock will trade at. So we'll go back to my Webull account here and we'll just look at that. So like for this stock right here, NOVS, the float is 17.6 million. But then when we look at the average volume, the average relative volume for this stock, it's 6.91 million. And right now, the current volume that's been traded is only 646,000. So guess what? There's not a lot of volume to push these shares up. And if the average volume is this and it's less, we don't. Now, if this volume was like something like 100 million shares of volume, now we're talking. It's way above 5 times relative volume, meaning there's a lot of people buying and selling this stock right now, meaning we want to be part of that. So that's what you have to look at. So I look at float, I look at this, and I look at the actual volume. And if this number is 5 times this number, then guess what? We want to be in this because the stock is moving up. So we want to be a part of that. So, all right, let's move on. I know this is a lot, so you can rewatch this video. I know this is a lot. You'll get used to it. You just follow some of this stuff I'm doing here, but this is my trading. All right. Also, we want to pick stocks priced between $1 and $20. Why? I want to choose those stocks because just think about it. If you're starting with $1,000, you can't buy a $500 share of NVIDIA, which I don't know what that traces at, but let's say it's $500. Well, if you got $1,000 account, you can only buy 2 shares. And if it only goes up 1%, well, I mean, you're not making a lot. You're going to make small gains. If I buy stocks at say $2, $3, $4, $5 and I got $1,000 in my account, guess what? I can buy a lot of shares. I can buy 100, 200, 300 shares right off the bat. And I can get a 10% gain on that, of 300 shares. That's $30, guys. That's a big gain pretty quick here. And we can start to build up our account a lot faster when we buy stocks in that price range. All right, and then there's one more, and that is that we want the most obvious leading gainer of the day. Why do we want to pick the most obvious one? Usually if you're looking at the app that I showed you, this app right here, if you're looking at that app, you're going to find that the leading gainer on that list, as long as it's not a penny stock, is probably the one you want to be trading. And that's just how it is. Now, if it's a penny stock, I usually move down the list until I find a stock that fits the criteria that I'm showing in this. So if you see in this video right now, screenshot this, take a picture of it. This is what I use. But you can start to dabble around in your own paper trading account and learning this stuff, and follow some of this, and use these points here to pick the stocks that are right for you. So now I want to share, just picking the stock is one part. That's half the process right there. When you pick the right stock, it makes the whole process easier, because now you know what to focus on, because everyone else is focusing on those stocks as well. So let's look at the risk management. There's some risk management things that you need to follow. Let's see here. I'm going to highlight this first one here and show you what my first one is. First off, we want to trade on a 2-to-1 risk reward ratio, meaning if I buy into a stock, I want the potential to be 20 cents of gain, but at most a 10-cent loss. That's what I have chosen. That's what I want, because I know if I can make 10 to 20 cents in the market on a share, well, at that point, all it is buying in volume now. If I buy a stock, 5,000 shares, and it goes up 20 cents, I've now made $1,000 and made my goal for the day. That's what I'm focused on. So I focus on a 2-to-1 risk reward ratio when I'm buying stocks. Number 2, let's see here. I'm going to cover that one. 3 trades in a row, bad trades in a row, and I'm done. So if I make, and now I'm not talking about as a beginner, but I'm talking more as when I get to the point where I've got a lot more money in my account and I can start to make multiple trades, and I get into an actual margin account, that if I make 3 terrible trades in a row, I'm done. I'm not gonna, if I can't get a good trade to go through, guess what? It's obviously not good. I don't want to focus on that, and I shouldn't. Now, next, also, I want to say that if I lose 50% of the day's earnings, I'm done. I'm going to say I'm not going to trade anymore. If let's say I make $500 and I lose 50% in the next trade, guess what? I'm done for the day. Because you know what? I don't want to risk losing the gains I've already made, because the next trade more than likely is going to be a bad trade, and I'm going to lose even more money. And I've seen it where people are green on the day and go red because they just don't stop. And a lot of times stopping can be the best move of the day. It may not feel right, but that's what it is. So next, max loss per the day. Once I'm up to a $1,000 per month goal, my max loss will be $500 per day. That's the maximum I would want to lose, because if I can make $1,000, I don't want to lose more than half of that. So to keep a 2-to-1 risk reward ratio, I don't want to lose more than 500. So that is the goal. All right, next, keep a low share size until I earn a $250 cushion. So if my goal is to earn $1,000, I want to build up my first $250, but I don't want to take huge share size, let's say 5,000 shares right off the bat, because if I lose 10 cents off the bat, now I've just lost $500, just like that. I don't want that to happen right away, especially on my first trade. Instead, what I want to take is smaller trades, maybe 500 shares, maybe 1,000 shares at most, but that way I can build up this $250 cushion. And then if things are feeling hot, the market is really hot, I'm going to lean a little bit, and then I'm going to push myself up to $1,000 for in capital or earnings that day. So, all right, next, only trade the front side of the move using the MACD. So if you're not sure what that means, if you're new to this, basically I want to trade, I'm a momentum trader. That's the trade I am trading. And let's see, let's go back to Webull here. I'll show you exactly what I mean. So what I mean by that, let's look at, let's see here. This was, that was the daily trade. Let's go to our 1 minute trade. Let's see, on GOVX might be the one I want to do there. Okay, so if we trade the front side of the move, this is what I'm talking about, the front side of the move. This is what's called the MACD. It's an indicator. This indicator helps me decide when I should buy. So for example, this line is above this blue line. That's when I want to buy. That's where I want to get in a trade. Anytime where this line is above here, this is a good point to get in a trade, possibly. And obviously I still need to look at other factors, but you can see here, if I would have got in down in here or on this micro pullback right here, I would have been able to make a pretty good gain on this trade. And I want to be on the front side new. Now you notice back here, back on about this candle here, this line starts to cross over and go flat with this blue line. Well, this would have been, even though this was above, I wouldn't want to take in this trade because obviously this line here is telling me this was when it was better, this isn't as good. So I want to follow that indicator a little bit. And the MACDs are just a simple indicator you can add to your chart. There's some other indicators I use. I use the 9, the 20. Well, this is VWAP, the volume weighted average price. And then this is the 9, the 20, and the 200 EMA. And then this is the MACD. And then I have volume bars and then my chart itself. That's the only indicators I use when I trade. So maybe I can talk about that more in another video or some of the videos I got coming up next week here. So follow for those. I'll talk more about that stuff then. But overall, I want to be in this spot right here. So we know that, we can follow that. So I want to be on the front side of the trade. I don't want to be on the back side because the back side is not momentum. All right, next, I want to keep a trading journal using TradeView. I haven't started using TradeView because they do charge if you upload too many. I might start doing that here shortly just so I can record all that in there. I think it'll help out. I know other people use TradeView to track their trades, but it's a good way. You can also use a spreadsheet to help you do that as well. And it works. You can obviously use that to do that as well. And it will help you track your trades like I do. I track all my trades. I want to see exactly everything I'm doing. And it helps me really know what's working, what's not working. If you watched my last video where I talked about the last 4 months of my trading, you'll see me talking about the things that I am trying to think about. Like, I need to improve this. I'm doing good at this, but I need to improve this. All right. So if I have a red week, then I'll reduce my share size and go back to the sim. So I will either reduce or I will go back to the simulator. That's just one of those things. If I feel like, hey, if I'm seeing 40% and I'm not doing very well, maybe I ought to take a week off and just go back to the simulator, try things over, and then go back. Hoping not to do that if I don't have to, but I may if it ends up happening. So, but we're still a little bit ways off to going with real money yet. So next, trade in a sim till I have 3 green months in a row, 10 cents per share trade on average. I'm doing that right now. That's why I'm talking about this, but I'm hoping to get 3 good green months. June obviously was not a green month for me, so we still have some time yet. I may shorten that if things get going here. I've debated changing that to maybe a month or 2 months because, I don't want to spend the next 2 years in a simulator. Obviously, I want to get out there and doing something here pretty quick. So we'll get to this. We'll obviously, okay, one trade. I will trade one strategy. That's it. I'm going to trade one solid strategy. I trade what's called a pullback strategy, a micro pullback or a traditional pullback strategy. I want something that's got momentum and I'm trading the pullback. That is my strategy. I'll talk a little bit more about that here in just a second. Okay, and I will only make one trade a day until I cross the $25,000 PDT threshold, which is the pattern day trader rule set back in the early 2000s. Basically what that means is if you are trading in a margin account, you can't make more than, I think it's 3 trades per week. So that's why I'm going to a cash account, because you can trade unlimited there, but you are limited by some other things, the amount of capital and trade settlements and stuff like that. So I'm going to trade in an actual cash account because it allows me to make a daily trade, whereas in a PDT, the PDT rules with a margin account, I can't do that. So, All right, where to buy and enter. This is the next part of this. I know this video is going a little bit longer. I hope you guys are enjoying this. If you like what I'm doing here, please subscribe, become a part of this, follow me along. I love to chat with you guys in the comments. Hopefully it's good. You know, I'm not a professional day trader here. Obviously, I'm barely a beginner day trader here. So follow me, become part of that. If you like what you're hearing here, what I'm doing, I'd love to talk to you guys more about that, and you know, talk about day trading. So let's get on with it here. So all right, where to buy and my entry indicators. I think I'm just going to clear all of these real quick here so we can just cover the whole thing. So first off, where to buy. My entry is the candle that makes a new high on the first pullback. So if I go to my thing here, my first entry, so obviously if I would have got in this trade, I wouldn't known to get in right here because this stock moved up before I would have gotten to it. But I would have got in at this pullback, right, this micro pullback right here. Now you may not understand what that means, but basically the candle opened right here and it came down. It went red. And then once the thing started to push above this candle here, I could have jumped in and I would have possibly taken this trade. We're above the VWAP or above the 9. We're in a good position. The MACD is open and I could have got in this trade and I could have rode it up. So that's kind of what I would have done here in this particular trade. So that's kind of what my move is, this micro pullback move right here. So that's what I'm trying to do. And then my max loss is the low of the pullback. So my max loss would have been probably right here at $3.77. My in would have been at probably close to about 390, 391. I might have jumped in a touch sooner, about right here at where it opened at, the candle actually opened at. So I could have, you know, mitigated that risk and stayed as close as I can to a 10-cent loss at most. So that's what I would have tried to do there. So, all right. And then right away, I want to see increasing green volume bars. Like in this case, I want to see these increasing volume bars. See how these bars are going up really nice right here? I want to see that happening. And then I want to see lower red volume, which obviously I started to see there. And that was good. I didn't want to see like big red volume bars here. If I saw big red volume bars, that's a clue that maybe there's some hidden sellers or something like that out there that could possibly, prohibit the trade from moving up and stuff like that. So what I don't want to see big red bars. That's obviously, I just said that. And I don't want to see big sellers if on the level 2. So what the level 2 is, basically that's this right here. You can't see anything right now, but the level 2 will actually show you the depth of the market and show you where people are at with their orders. And if you see, like, let's say I see a buyer or seller, real big seller at, like, say, in this case, maybe I saw a big seller at $3. You know what? If he's selling a bunch of shares, guess what? It's probably going to reject, and we might see a big flush right there. So I don't want to get in at $3. I want to hold off. And that's what the level 2 really works at. It's kind of like watching what's in front of you in the market. And so you can kind of see what's going on. And then the time of sales is kind of what's going on behind you in the stock chart. Well, this is what's already happened. And this is what's happening in front of you. So the level 2 is important to have as a part of that. So I might talk about that in more videos. So obviously just follow along, and if not, just research it yourself. But level 2 is a part of it, and you want to have that. Okay, so where to sell? When should I sell? And this is important here because we have to know when to get out of these trades, because if we don't, well, guess what? We could lose some money. So first off, if the price starts to go down, if it's starting to go down and the trade does not take off, well, you know what? We need to get out of this thing right away. We're in a commission-free brokerage. Like if you're with Webull or Robinhood, you got commission-free brokerage and you're not paying to get in a share. You don't pay $10 to get in and $10 to get out. So that's good. You don't have to pay those fees, and that helps out. If volume declines, if you start seeing declining volume, meaning instead of, let's go back to this one right here. We can obviously see if we start to see declining, if this was the opposite, we saw this big volume bar here and this was starting to slope down, well, you know what that tells me is that the volume is moving away from the stock. People are not buying, and that's more likely that we're going to see some bigger volume come in from sellers and stuff like that. So we don't want to get in then. If you see a big seller on the level 2, I talked about that. If we see a big seller on the level 2, we definitely don't want to get in the trade. And if the trade stops, stop trading, the stock loses momentum. Meaning if there's nobody buying, the volume is literally flat and nobody is buying, you do not want to get in these trades then. You just want to sit back and kind of let things go, because if it starts to do something like this right here, where it's just traveling sideways, you don't want to get in it. You just don't, because you're not really going to make a big gain. It's not going to make a big move right now. We're actually on the backside of the move. It's kind of flat. The MACD's flat. So we just don't want to get in. We want to get in when it's doing stuff like this right here. This is when we want to make big moves in our trading account, and that's what we're looking for. So actually, one thing you can do is kind of take snapshots of these pictures, screen captures, and print these out just so you know what they look like. I like to look at these a lot and just kind of dissect them and say, oh, you know, where would I have gotten in at this trade at, and break them down, you know, and just really look at them. So, all right. When to stop each day. So this is another part of my trading plan I have here, and that is this right here. Max loss 50% day. If I give back 50%, obviously I'm done. If you give back half of your profits, going from daily goal to red, if I'm making green and I go to red, yep, I'm done. I'm out. I'm not gonna, because I know what's gonna happen. I'm gonna keep trading and I'm gonna lose more money. I try to walk away though. One rule I did put in here is that I try to walk away if I'm down 20%, you know, walk away, you know, because obviously you've hit the peak and now you're starting to walk it back down. So now what you want to do is take either smaller size or just quit altogether. And then finally, if your emotions are high, if I feel angry because I made a terrible trade, well, emotion has now entered the situation and you want to get out, because emotion is going to do nothing but ruin everything that you're doing. So definitely want to stay away from that. Okay, let's get into the last few parts here of my strategy. I know this is a lot, but like I said, I spent months figuring this out. So for me. So next, I want to build discipline into my strategy, because trading really requires a lot of discipline to discipline over your emotions, discipline on executing on the right strategies, all that stuff. So I want to practice discipline in other areas of my life. I want to exercise. I want to eat right, stuff like that. And I also want to have a journal and review my trades regularly. So I'm like looking at like, why did I make this trade? Why did I do this? Was it a bad trade? What is a good trade? What did I do here that was right? What did I do wrong? And I want to have this discipline in my life daily, because discipline here builds into other areas of my life and helps me become a better trader. All right, so that leads me down to my daily action plan, which is this right here. My daily action plan is I want to be in bed by no later than 11, typically 10:30. I want to get a good night's rest. That way I'm ready for the next day, because I want to get up at 6:30 and I want to be ready by 7 a.m. for the first real trades. Because 7 a.m. is usually when the first brokerages get online and start trading. And that's where you start to see more volume enter the market and stuff like that. I want to review my scanners for potential stocks, and I want to build a watch list at that point. I want to look at who are the stocks that I want to be following and looking at. At that time, I'll usually make coffee and get focused for the day. I usually don't drink coffee when I trade though, because caffeine doesn't really help with that kind of stuff. You kind of get a little anxious and stuff like that. So I found just don't do that. I usually make my coffee and take it to work with me. And then I'll watch for any potential opportunities to buy and make A plus quality setups and trades. So I watch the stocks, I look at, actually I spend more time watching stocks than actually making the trades. And as a beginner, that's fine. I'm good. I'm watching everything. And then when I know it's right, that's when I make the trade. And if I get to the end of the day, my trading time where I'm at, it's 11 a.m. and I haven't traded nothing, guess what? I'm not trading anything that day. So that's how I do it. So overall, that is my trading plan. This is everything. You can look at mine, model it after yours. Don't take what I have here and just use it blindly. Build your own based on your setup, your trading, what you're doing, what works for you. Build it based on those things. Don't try to copy what I'm doing. I didn't copy from Ross Cameron and I took what he had and I started building my own trading plan based on what I want to achieve here. So, and it follows my risk and what I have available. So take that and do what you want with it. Obviously this is mine, but go from there. So in my next video, I'm going to be talking about the next trades I do. So I'll be doing that. We're heading into the 4th next week. So I don't know how many videos I'll actually be putting out. My goal is to put one out every day, just covering, 10 minutes, going over my trades and stuff. But from there, that's, hopefully I have some trades to show you. So, but we'll go from there. So hopefully this helps you out, kind of helps you stew some ideas for your own trading plan that you should have available and you should be working on, and set up your own simulated trading account. Go from there, get that out there, just buy a share. Just try pressing the buttons, learning how this stuff works. That's what I'm doing. And I'm learning this stuff. And hopefully you find some value in it. If you learn more about Ross Cameron stuff, I'll put a link in the video below. You can check out his stuff. You can also go check out all the videos I've put out so far. And hopefully this helps you out, get started with your trading, and shares my journey as we're getting going here. So I look forward to seeing you in the next video. Bye for now.